I check all the boxes, but when I tried to buy a car, I got rejected. You are cash rich, credit poor. Like, that's not a problem. That's just what it is. A system cannot understand you. You don't have to be better than Jamie Dimon, JP Morgan. However, I'm more qualified to talk about thin file and no file, a profile of customers than Jamie Dimon.
Hello, everyone. My name is Igor Tomic, and today you're watching an episode of the Fintech Garden. It's a podcast, and I'm pretty pleased to introduce Kristy Kim, who is the CEO and co-founder of TomoCredit from the United States. For me personally, the United States market is always interesting. I started doing the business in the United States initially in 2010-11. It's always good to dive deep and to discuss what is happening. So hello, Kristy. How are you today?
Good morning and good evening.
We are recording this overseas, so we have huge difference in hours, but I think it doesn't affect our conversation today.
Yes.
I would like to start the story with your product because I think it overlaps a lot with the topic that I would like to discuss. It's immigrant products in the United States and basically immigrant economy, why fintech keep missing the first generation America. I know that your product is on the market, is active, you have customers, but I would like to go back to the roots and understand what were the triggers and how you made or what triggered the idea to open own product in this area.
Some backstory is that I'm originally from Seoul, South Korea. And then when I first thought that I want to live in the US is when I was like only 11 years old. So when I was young, when I first got here, I'm like, oh my God, this is amazing. I want to stay here because I felt that school was easier here compared to Korea, especially like math and science. I was like, okay, this is great. I get to play more here. So I remember thinking that, okay, my parents couldn't move with me. They couldn't move to the US because they are both entrepreneurs. They had to stay in Korea. So for me, okay, how can I survive in the US by myself? Especially when my parents were kind of not so super supportive of me staying in the US because they are like, why do you want to stay in the US by yourself? You should stay with us in South Korea. But I was so like eager to stay in the US and wanted to live in the US. And I think my version of American dream was thinking that, okay, go to school and study hard and then get a job. It was kind of very linear thinking, but I think that's how most of people do. So I thought that's what I'm going to do. And after school, I realized that, oh, okay, I have a job. I check all the boxes, but when I tried to buy a car, I got rejected. So that was like a moment of realization that, oh, how come nobody taught me this? My parents couldn't teach me because they didn't know anything about US credit system. So for me, it's like, oh, okay. Just like how I had to figure out how to get a job, how to get a visa, all that by myself in the US, getting a credit or establishing credit, I had to figure out myself. But once you know it, it's not that difficult. But when you don't know, it's like a lot of confusion. And for me, I felt like, okay, I want to help other people avoid that unnecessary drama and mistakes that I had to go through.
I think historically, credit scoring or credit history is functioning really different in the United States compared to other countries, and that's one of the toughest moment. Like you need to understand the rules, building the credit history from the market perspective. Do you think that's something that should survive? Because fairly, I see the changes in the market, the products like yours, or even right now with the generational changes, younger generations, they are not super excited to go to the banks, build this credit history. Is this changing on the market? Is it something that you see from your perspective?
It's getting more complex in the US because in the past, as long as you are like born in the US and assume that you are not first gen, right? Like cookie cutter in some sense that, okay, if you think about like 50 years ago, for example, that it's a little bit homogeneous that, okay, you grew up here and then you get a job and then you get married young and you have kids and then you buy your house, very typical American dream. It's like, looks like one way, right? Everyone wants this car, this house, right? Perfect American family. That's like how it's supposed to like look like. But now with the younger generation, as you mentioned, right? Like, do we really need to buy a house? Now people like rent or people get married later, right? And then the success looks a little bit like different these days. And it's more complex in that sense. So there can be a lot of people with great income and great earning potential or investment account or savings account, but not necessarily have credit history because they never made a big borrowing. Like they never got an auto loan, they never got a mortgage. So they don't have any like big credit moments. So even though they have a lot of money, their credit file is still very thin. And then that's exactly the case for many immigrants. And immigrants, they come here, they're, especially if they're come from the background, for me, like South Korea, like the mentality is like, you don't really borrow a lot. The culture is still a lot like saving focused. People who come from that kind of mentality would not borrow here. And then they would try to save more and then to spend within their means, not knowing that borrowing can be a positive thing if you borrow like with strategy, right? Like borrow amount you can pay back and you pay back. And then with that, you can build a score, you can leverage more. It's all beautiful, like leverage strategy the US really encourages. But I think once you know it, you can play the game. But when you don't know it and you are kind of being out of the system, and then when you need it, it's hard to enter.
That's true. And I think cultural aspect is here is really important because in certain cultures, it's acceptable and even facilitated to operate with the finance this way. But sometimes people are coming from the cultures when you have to rely on yourself and not you are not really looking to have the banks facilitating the payment if you don't have money, because that's kind of the decision process. If I don't have money, I'm not buying something or I'm saving till the moment when I have this possibility. So I think that's might be one of the area that we would like to discuss here today, because your product, as far as I understand, is aimed for immigrants. And do you see the difference in terms of how the product should be structured and communicated as a value for the customers who are coming from different countries?
That's a great question. So we have not like intentionally tried to use different messaging, but we noticed definitely that, group of people react to different messages. Immigrants specifically, for them, I think it has been helpful for us to make them feel like they didn't do anything wrong. It's like the system that cannot understand them. So it's more like positive spin on it. So people don't feel like bad about the situation or don't feel guilty or ashamed of the fact that they don't have credit score. That's why we've been using the slogan cash rich credit poor a lot, because we are saying that, hey, you're cash rich credit poor. Like that's not a problem. That's just what it is. A system cannot understand you. The system cannot like understand or like haven't figured out how to verify or see that you are actually cash rich. And it is not like one time cash rich. You actually have ongoing income stream, and then we can analyze your cash flow coming in and out and then actually assign you a score to really help you show to the world that you are cash rich credit poor. So that's when we first came up with our own scoring. That's how we communicated. We told that like immigrant or international students, expats, people with that kind of background, we will communicate with them that, hey, if you are cash rich credit poor profile, come to us. We have technology to be able to identify your amazingness and then being able to put a score on it. So it's easy for other people to understand you.
It's a great slogan because it really defines, even from the product perspective, the funnel, because that's the people who are omitted from the standard system. Like you don't have the credit score, it means that you are not eligible and you have to start somewhere. But have cash reach means a lot. And with this setting, it really defines the landscape for the business, because there is a specific problem that you have from your experience. There is a potential set of group of the customers, and then we have the market which is not accepting or not challenging those changes. Can you tell us a little bit your experience with opening? Because in the United States, that's another challenge and barrier, because compared to other countries, you kind of have unified legislation which is allowing to operate on the specific license. But in the States, you have to meet federal and then state requirements for operating in different states. So tell me about your story. How did you get into the production state with this product?
I didn't know the details about the structure of the industry because if you think about it, I came as an outsider. It's not like I worked at banks before. I worked at investment banking, which is totally different from traditional banking, right? So investment banking, I feel like it's a lot of result driven, right? Like getting shit done and then, how to create the highest return. So I felt like I was playing a lot of offense game throughout the banking, investment banking, and that's how I was like trained on it. Even after banking, when I like worked in tech, it was all about how to be most innovative, how to like do things, differently and better. And the kind of that was the mindset that I had coming in. I think that was actually blessing in disguise. That first of all, I was not jaded, right? I was not like too skeptical or too negative. I had a lot of like positive like energy, and I felt like in startup world, I always feel like I'd rather be a positive fool than a skeptic or cynical or like, overly critical person, because I think at the end of the day, like compliance, regulations, all that, it's all done by people, right? And then our perspective changes, right? Like in the US, for example, like it's like SpaceX or crypto, all that, like a lot of people like criticize, a lot of people love it, but at the end, it kind of finds a happy medium. But it's never perfect, it's always evolving. So I always felt that, okay, it's not set in stone, that a lot of part, like regulators and policymakers, like they are learning from the industry, they are getting feedback from the industry, and then try to, make changes. But in the meantime, like let's make sure that I understand the best what it is now, current status, and then I was thinking, how can we influence their perspective for the future, right? So they can be more understanding of the journey of immigrants, right? Because when I'm pretty sure many regulators, when they come up with regulations, they don't really think about, oh, what about like immigrants without credit score or without credit profile? That's not what they really think about. So there can be a great use case of great technology, great product that can really help them, but that might be too new for them. So for me, I always like try to think that, hey, I'm gonna play by the rule. I'm gonna follow the rule, but I'm also gonna think positive way that I can hopefully over the next decade I can influence the industry in a positive way.
Positive thinking, and I really like the slogan of the commerce chamber. We're doing it not because it's easy, because we thought it's going to be easy, and sometimes it gives really good results. So in terms of the licensing, like for exposing to our listeners, like what is the license structure required to run the business as TomoCredit? Because operating as a credit engine and scoring and providing the credit is something which is really interesting.
So I am not very familiar with the differences between different countries, but in the US, like what we learned is definitely, as you mentioned, that we have to think about both state level and federal level. And then I think there are multiple areas, because when we enter the area of consumer credit scoring, right? And then the part is, hey, are we actually like determining the score, or are we actually like making an underwriting decision? Or are we playing the role as just coaching customers? I think these details and nuances matter a lot, because if you think about it, me as a customer in the US, I can go to ChatGPT and ask about, hey, build my retirement plan, or why my credit score going down? What is my credit score? There are certain questions that ChatGPT can answer and cannot answer. And one question that, as I'm aware, as of today, ChatGPT cannot answer, what is my credit score? I can double check it changed, but when I checked last time, they cannot answer because they don't know my credit score, right? But assume that they know my credit score. Like I would tell ChatGPT, hey, according to TomoCredit, my credit score is 750, but it looks like it used to be 600. Can you analyze what worked, right? Then ChatGPT, as of today, cannot analyze it. But if I, let's say, download everything from Tomo and then put it into ChatGPT, and ChatGPT be able to explain, you did this well, but this part you didn't do well, being able to explain in a simple English, that's more of coaching, right? It's not like credit repair. It's not credit lowering your debt, like negotiations, not that, not active. It's more of helping you understand, more of a coaching. So for us moving forward with all the consumer AI use cases, we've been thinking a lot about, hey, can we focus on a lot on coaching part? Because what people are struggling is not about just a number, right? It's more like understanding, why my number changing? Did I do something wrong? Right? So that part, I'm hoping that we can move more towards into the area that, okay, it's not like too heavily regulated. It's more of literally like financial wellness and coaching. So that's kind of direction we want to go into more.
Pretty interesting path, and a lot of right now LLMs, they focus on the educating people, because I think one of the area of improvement that we see, people started to learn how to ask questions, and those tools are potentially educating people to understand more about the things around them, and credit scoring one of the important things. But I would like to follow up, like, from your vision, what is the difference, as we discussed, first generation American, someone who came to United States, because the thinking and cultural process that we discussed might be a bit different from someone who's been raised and know by details how the credit scoring is working. And does it differ the profile of the customers who expats in coming and they cash rich but credit poor from the Americans who are using your tools, or even is there the demand from Native Americans, someone who have been there for generations?
So their needs are different. So let's say expats or people who are coming to the US with already established income or like savings, right? So for them, their needs are they want like higher limit. They want access to like meaningful amount, right? Because for them, their thinking is like, yeah, if it's like $500, I don't have to borrow. Like their problem is not about not having money to get by. Their problem is like, hey, can I buy a new house? Can I buy another car and don't have to pay full in cash? That's like more of what they need. Versus there are a lot of people who just want to get $500 just for this month or this week, right? For emergencies and etc. Totally different problems and needs. So for us, like we try to understand and then come up with a personalized solution. And I think that's what I really love about like building Tomo is in the traditional system, it's all about score. If you and I have same credit score, technically we are same. When we get presented to like banks, like 20,000 plus banks in the US, they see us as equal. But in reality, you might have 5x more money in your savings account, or you can be 10 times wealthier than me, right? But just because we have the same score, banks will see us exactly the same. So I thought that that's like just not good for consumers and also missed opportunity for institutions as financial institutions as well.
That's one of the unique processes that I see from my personal perspective, because we're shifting from stale pillars of data. Because the credit score, in my opinion, feels like a old banking process where you have a department which is making a decision as a score, and then everyone is taking this data as a granted. And what we see even in products like buy now pay later, rather than asking for the numbers, even if it's provided by the third party, we're analyzing signals like what cash flow do you have, what equity, what savings, yeah, sometimes even goes into the mobile phone usage. Are you registering from the prepaid phone or from the contract? Because it kind of gives background information. So do you think this trend is going to be on the market when we shift in from assumptions that we know the person into real analysis of the data, which is easier and easier to pick up in our digital lives, like how we even behave in social networks, maybe?
Yeah, definitely way more data points available these days, right? And then I think that's the beauty of AI that I find it very exciting because people either react fear or excitement. I just feel like human emotions, it's just two. I can explain either fear or excitement. And I felt very excited thinking that because everybody knew, as you mentioned, that data is important and everyone is unique, and the more data to look for, as you mentioned, like mobile phone data, basically spending data. What do they consume? What kind of consumers they are? Are they drinking like Starbucks coffee versus like blue bottle coffee? Things like that. So data is available, but now that with AI, I think more people are excited to now bring that into the decisioning algorithm. Or that use that for marketing, for better marketing or better customer profiling and etc. So I feel like, okay, before whenever I pitch to financial institutions, I felt like I was hard selling them that, hey, you know that you are missing out on these amazing customers. You know, you should look into using my product or work with us to find more customers who are qualifying but not yet discovered. But now I feel like I don't have to sell at all because now everyone knows that, oh man, like look at ChatGPT, look at this like the new AI that definitely, there's no doubt that things will change in consumer finance. Now it's really the question who's going to win, like off to the races. So I think that's where startups have a lot of advantage because we are the one who will really try everything and ship as fast as possible compared to a department within the banks that have to like go through the layers of approval process to see which model to use, like what to do, versus for startups, we are more consumer focused and thinking what consumers want and then keep testing. So our cycle has been pretty fast when it comes to new deployment, but it's getting even faster and faster.
That's true. The last 18 months have seen a wave of immigrant focused fintechs raising serious capital, Common, Pillar, Welcome Tech, Majority, and others. So the underwriting, the cash flow used for underwriting is becoming the mainstream, I would say. But what do you think is going to be the landscape like in next 2-3 years in these startups? Like we see that there is the shift, but from your perspective, what is going to change in this area in next years?
That's a great question. So for me, I started this before this was hot, right, or
Yeah.
popular. So for me, I didn't really started the company out of my own struggle and pain points. So I was like 1,000% convinced and committed that, hey, this will be eventually like $1 billion company if it's like not a trillion, like SpaceX. Because for me, I just felt that it's so obvious. It makes common sense, right? Especially as a perspective outsiders looking in to the market, like South Korean, like immigrant perspective. It made sense to use new data points to do a better underwriting or better understanding about potential borrowers. So for me now, finally, it's getting adopted at a more of a mainstream level. So before, probably it was more of a niche market, still like a kind of like here and there, but now it's becoming more mainstream. So that's probably why you see more companies in that space. So for me, I think long term, it is, I would say, good for startups, but also I think it's good for big companies as well. So it's not like, I don't think that's like a one company winning. I think it's going to be multiple companies because once something becomes more of a mainstream norm, right, then this becomes a boring thing. Maybe like in 30 years, 20 years, everyone say, oh yeah, what Tomo does, isn't that the norm? Like, that's boring, right? Everyone does that, right? And I think that's what I want to see. And I sometimes see that it's so silly to think that the startups are think that they're competing with each other. I'm like, no, we start these startups, we are still small fish in a really amazing big opportunity because you are immigrant, I am immigrant, so we have understanding, global understanding that yeah, maybe this works here and then it will work in other countries as well. Then we are really playing important, a small role in this big movement. So I think that as a startup, like it's mainly positive. I don't think there's like a lot to really worry about, especially regarding the competition. Because I hear people ask about, oh, what do you think about this company, that company? I'm like, we can all succeed. There are like 20,000 plus banks in the US.
That's true. United States market is really big, and I think there is enough competition. And another angle that I would like to approach is the embedded finance, because I would say fairly before that, everything was kind of the super app for the banks, because either you go internet banking or you're checking your balances. A lot of things were happening either in branch or in applications. And right now the space is kind of fragmented because that's one of the case for TomoCredit. You can analyze something through the open banking and see the credit like for scoring what you have. Do you think the vector with the embedded financing in the United States is going to extend? Because fairly right now, one of the things which is missing in it's payments through the open banking in the United States, because even Play doesn't initiate the payments and it's still kind of fragmented. Isn't going to be on the level like in the European Union, and what is happening into the embedding different processes, financial processes into the everyday life, opening the e-commerce and seeing, okay, your Tomo credit is that. Actually, if you buy the thing or if you buy now pay later this thing, it might get better.
My perspective is embedded finance can be good, but not so good as well. It had with two parts of it. The reason why I have formed this opinion is, again, I'm from South Korea. So in South Korea, there is finance super app. So I'm used to using it and I see my family using it all the time. So no matter what they need, sending money to each other or opening a bank account, digital bank account or investment, they would just use one single app for everything, right? So that's good. But at the same time, as a startup, that's really tough market to crack.
Yeah, that's
It's
true.
like,
That's true.
well, there's a one giant winner there. It's like hard. How do I crack, right? So versus in the US, it's fragmented. It's not good in some sense. But for startups perspective, I'm like, this is actually great. I don't have to be really good at the whole. I don't have to do everything. it's like I can be really good at like one thing. So that's more of, I think, like founder's perspective, right? I feel that's more of founder perspective, thinking about go to market and then winning the market share.
That totally makes sense. And that's definitely the takeaway for this episode. If you are planning to do something, it's not the question of doing everything in the level, it's focusing on what you can do better and bring to the market as additional value. Since we're approaching the end of the episode, usually I'm asking this question: is there anything that I didn't ask you today that you would like to share with our audience?
Just related to what you just said, that's something I always want to end with, that for startup founders or people in this ecosystem, I think the beauty here is, as you exactly mentioned, that we don't have to outsmart like big players or old players. It is more of we can hone into our strengths. So I tell my team as a joke all the time that we don't have to be better than Jamie Dimon at JP Morgan. However, I'm more qualified to talk about thin file and no file, a profile of customers than Jamie Dimon. That's like, I do swear by it. I'm like, when it comes to this open banking, cash flow, underwriting, I have way more expertise. So I tell my team that you guys are experts. You guys have more expertise than Jamie Dimon. So be proud and then like keep building. And then we will really focus on this like specialized area.
That's a great second takeaway, because definitely with every team we can find the things that we're doing better than others and focus on that, and that's a great motivator and factor to continue doing great digital products. Thank you for your time today. It was really nice discussion, and thank you for sharing your experience and story, even market state in United States. Thank you for listening us today, and please come back to the other episodes and FinTech Garden News.